Fear and panic is increasing amongst Australians over the rising cost of living. Today, I want to give an interest rate update, and unfortunately, it's not good news. In the last few hours, the RBA have just increased, making it 1.35% in 3 months. My initial thought here is that this is going to hit the economy hard in the next 12 months or so. And I'm actually a bit frustrated because what is happening probably won't fix the problem of rising inflation anyway. The RBA Treasurer also said recently that inflation could get to 7%, which is a pretty high number. The way I see it, if they think that inflation is going to go up that high, the Reserve Bank of Australia is going to keep raising rates to try and fight that until something breaks. Personally, I don't think it will work because the core to our inflation is supply issues. The floods in Queensland pushed vegetable prices higher. The war in Ukraine has pushed fuel and energy prices very high and is starting to push food prices even higher. The pandemic caused enormous supply issues because it limited us to move goods around the world. And I don't think these issues are going to be fixed by decreasing demand, which is what you do if you raise interest rates. A few months ago, I didn't think rates were going to go up this much, or at least this aggressively. But at the end of the day, it's going to trigger some bad things in the economy. All these supply issues around the world are already causing a lot of anxiety, but rising interest rates on top of this is just going to make things a lot worse. So I think firstly, with a lot going on that is outside of our control, let's be realistic and just focus on the things that we can control. You can try to monitor your daily spending and identify where you can cut down a bit to help meet expenses without causing too much sacrifice on your lifestyle. Monitor your food bills. Don't use Uber Eats or Menulog or Deliveroo so much. It's not healthy physically and financially. Stay on top of your household expenses. Don't sell your assets. People come to me now and ask, should I sell my house now? Consequently, property prices are going to drop because of the surge in interest rates. But the point is, you shouldn't sell your assets. They're called assets for a reason. Even if the economy goes bad, do not get rid of your assets. Instead, get rid of your liabilities or at least reduce them. We're living in these weird times and they're about to get weirder. They're about to get harder as well. What I want to say is don't worry about the outside world. Focus on what you can control first, because that's going to ultimately end up with you getting through whatever it is that we're going through in the coming months. For homeowners, by far your biggest expense is going to be your home loan, and the team here at Wilbell Mortgage Broker is getting savings of over a couple of grand a year for most of our clients by refinancing. To see if we can help you, book a quick call using the link below. Cheers.